welcome to a special Friday edition of The Good, the Bad, and the Ugly, where we review all of the options trades we've talked about on Zach's Live Trader and tell you where they're at. Now, usually I do this on Thursdays, but we didn't have anything expiring this week, so I figured what the heck. Plus, we had 3 of these companies reporting after the bell yesterday, so I wanted to make sure we got that in before we talked about it. So there we go. We're going to cover a lot of stuff today because we had Turkey Day last week, so nobody really wanted to talk about stocks because we were all stuffing our face with turkey and stuffing and all sorts of fantasticness. So today, we got a lot to cover. So it's going to take a little bit, but bear with me, my friends. Let's just get right into it. Talking about our bullish call spread we had on Foot Locker. This was the long January 70-75 call spread for a net debit of $1.95. Max profit with shares of finish line above $75 per share. The good news is Foot Locker did very well. Spreads trading at $3.15 right now. Looking pretty nice. I'm hoping that this will continue. So the game plan here is just let's just go ahead and wait it out. The stock's between $70 and $75 per share right now. So as we get closer to expiration, what will happen is that $75 call will shed a little bit of its value, and you're going to see this spread tick up a little bit. So hopefully we can push it over that $75 level, but we'll see. Okay, guys, now up next, Dish Network. We had a bullish call spread on Dish Network. Went long the December 16th 55.60 call spread for $2.05 net debit. Now the thing about this, we got 2 more weeks, okay? So keep that in mind, 2 weeks till December expiration, and that's obviously going to be a big video where we cover a lot of things. Max profit with Dish above $60 per share. This one's going okay because Dish shares have actually pushed higher. And what's happened is that further out call, that $60 call, has actually got a few bucks in it. So the spread's trading at $1.70. So here's something that we could do. We could wait it out, or this is something that you're going to see a lot during this presentation, closing the long and keeping the short. So what I mean by that, in this case, you got a 55.60 call spread. So if you sold the 55 and allowed the 60 to hopefully expire worthless, you're going to end up in the green on this trade. So it's going to be a common thing that you're going to see throughout this. If we buy these call spreads and they don't quite make it past the long end, the further out end of the call, we can just go ahead and let that erode over time, and that's a great way to make a few extra ducats. All right, so what's next? Disney. The bull call spread on Disney. We were long the Jan 20 Disney 92.50 100 call spread. Getting real bullish on this. I was looking for $7.50 on that. The call spread cost us $3.25 as a net debit. So this was a max profit with Disney above $100 per share. Good news is Disney is pushing higher, and this spread is up at $4.90 right now. And again, same sort of scenario where Disney's up close to $100 per share. So I think what we're going to have happen is that this call is slowly going to erode the long call, the one that's the further out call, the one at $100. So for now, again, we're just going to hold on to this one. We got to January 20th. And remember when we were talking about Disney, it was all about Rogue One. They've got another Star Wars movie coming out. We think that's going to benefit them. And Disney Studios has already done something like $6 billion globally. So fantastic stuff happening over at Disney. The trade's working out. But let's take a look at Deere. John Deere. So this was only for your premium folks. It was a bull put spread. So how do you put one of those on? We went short the December 16th 92.50 90 put spread for a $1.08 net credit. A real fat net credit there. Nice amount. Next profit with John Deere above 92.50. That stock's above 100. So this is the fantastic stuff. The spread right now is essentially worthless. So remember, when you're short these put spreads, you're on the hook for what's going to happen after, right? So if you sell for $1.08, you want it to go down, so you buy it back at zero, or obviously you don't have to buy it back at zero. It's just worthless. So that's what we're going to do here. Just go ahead and we're going to make the maximum gain. All that $1.08 is in our pocket. So this one worked out fantastic. Thank you, John Deere. All right. So now we're going to look at Gilead. So this was the drug company, and they've been whipping around a little bit. We put on a bearish put spread, essentially saying we wanted Gilead to go down. So we went long December 16th, 75.70 put spread for $2.66 net debit. This one has maximum profit with shares of Gilead below that $70 holler. It's at $2.50 right now on this spread, but this is what I want to talk about with Gilead. This thing whipped around like crazy, and in the early stages of the Trump trade that we saw, a lot of these drug companies caught a shot in the arm because everybody calmed down because Hillary's not going to be our president, and they thought that with Hillary as president, there was going to be a witch hunt on Capitol Hill coming for all of these drug companies trying to tell them what they can and can't do with their pricing. The good news is, for the drug companies, Hillary didn't win. So there was a positive reaction in all these drug companies. Now, the good news for us is that's since waned a little bit, and Gilead shares are starting to come down a little bit. So it's fantastic stuff. Spread at 250. And I say, again, there's another thing. You can hold it, or you can close out the long end and let that further end expire worthless. So that's another game plan here for Gilead. So lots of good stuff happening here in the early going. Now, GameStop put on a bearish put spread on GameStop because gaming is evolving and people are just downloading their games and playing them instead of going to GameStop to hang out with the super nerds. Long December 16th, 24.23 put spread. It cost us 58 cents of a net debit. Max profit with GameStop below $23. And the spread's trading at 34 cents right now as GameStop's kind of right here in 24 and change. So we just got to wait this one out a little bit. I know we don't have a ton of time, but a little bit of time. And again, we're talking options, so these shift on a dime. So when you see something 34 cents that we paid 58 cents for, you can expect it's going to chop around a little bit. So as I said, let's just hold on to this one, okay? Now, ULTA. We just talked about ULTA. We put on a bullish call spread. We went ahead and did the December 16th, 260, 270 call spread for a $4.50 net debit. Max profit with ULTA above $270 per share. Yesterday, immediately following the earnings report, ULTA was well above $270 per share. Today, it's Chop City. It got all the way down to $244. So this is why I never, ever go long a call spread the day before expiration. That's why we went a couple weeks out. Give the market its time to go crazy, whatever's happening. Again, sometimes what happens is these big institutions want to come in and sell when there's liquidity, and they have liquidity on earnings. So earnings report, sometimes people come in and dump it, even though it was a fantastic report for ULTA. So right now the spread is trading at $2. I'm not freaking out. I don't think you should either. Patience with this one. Wait, it was well over $270 in after hours. I think we're having just a bad reaction here today. Let's see what happens next week. We've got a little bit of time for this. I think it's going to be okay. All right, now, Ambarella got crushed. Chips got crushed yesterday overall. I think in Momentum Trader, I had stuff down 3, 4, 5, 6%. So the market was just out there slaying. Now, we went long the Jan 20, 60, 65 call spread for a $2.30 net debit. Jan 20. So we got a lot of time here. We got another month and a half, 6 weeks. Max profit with Ambarella shares above $65. That's not happening right now. The spread's down here at $1 as Amba's off like 9% on earnings. Man, they just came out and beat the tar out of these companies. So again, here it is again. Cover the long and hold the short. So if you could sell the 60 and hold on to the 65, that'd be great. But again, it depends on what sort of account people have. You may not be able to do it. Still, it's nice if you can get it. Otherwise, you just rip it, take the buck, and we'll move on, okay? Moving on to Smith & Wesson, which is having a very rocky morning as well. So Smith & Wesson, we're looking at the bull call spread. We were long the December 16th, 24-26 call spread for 78 cents net debit. Max profit with Smith & Wesson above $26. Smith & Wesson is blowing up right now in a bad way. The stock's at $21. They sold on the earnings report big time. We have a couple weeks. We'll see, because right now this spread is absolutely worthless. There's not even a bid on the $24 call. Yeah, man. Sometimes in a windshield, sometimes you're the bug. On this one, get what you can. If you can get anything, if you can get a nickel for the $24 call, take it, because it's brutal. There's just no bid whatsoever. Shares are off 10%. We're really getting hammered. But this is why we trade options, my friends, because you had a clear-cut definition of your risk. In this case, 78 cents was our risk. That's all we lost. Now compare that with being long 100 shares of the stock, and you wouldn't have lost 78 cents. You'd have lost $3. So that's how we mitigate our risk by trading options. So again, questions, comments, concerns, shoot me the email, livetrader@zacks.com, and I want to hear about next week. What are we going to trade next week? What are we going to talk about? I'm starting to massage the format a little bit too. I think you guys are going to like it. Going to present a much more thorough bull case, more thorough bear case prior to giving these options. I think it's going to look good. So again, everybody have a fantastic weekend, and I will see you all next week. Have a good one.